Monthly Economic Update, January 2025. Welcome to India Business Insights. We have been bringing this monthly update to you for almost 2 years. Our videos are often shorter versions of detailed reports that we produce for clients. In this January 2025 update, we take a quick look at the latest economic trends, challenges, and opportunities shaping India's financial trajectory. You will find coverage on companies, government policies, industry analysis of various economic issues, business and commercial laws, and the business environment. Don't miss out. Hit the subscribe button, turn on notifications, and join thousands of viewers who are staying ahead of the curve with India Business Insights. Let's get started. GDP. On January 15, 2025, the National Statistical Office released its comprehensive economic report for December 2024, revealing critical insights into India's economic performance. The report, published with detailed statistical analysis, indicated a real GDP growth of 5.6% for the month, slightly lower than the previous quarter's projections. The Ministry of Statistics and Program Implementation report, released on January 15, 2025, highlighted that the manufacturing sector experienced a modest growth of 4.2% in December 2024, reflecting ongoing economic challenges. The services sector demonstrated resilience, maintaining a growth rate of 6.7% during the same period. Sectoral performance. Number 1. Manufacturing growth declined from 9.9% in FY 2023-24 to 5.3% in FY 2024-25, marking the sharpest contraction. Number 2. Secondary sector. Growth slowed from 8.4% in Q1 of FY 2023-24 to 6.9% in H1 of FY 2024-25. Number 3. Tertiary sector showed a growth rate of 7.1% in Q2 of FY 2024-25 compared to 6% in the previous year. Number 4. Primary sector. Agriculture and allied sectors rebounded to 3.8% growth in FY 2024-25, up from 1.4% in FY 2023-24. The Reserve Bank of India's Economic Bulletin, published on January 10, 2025, projected a GDP growth range of 6.3% to 6.5% for the upcoming quarter, suggesting a cautiously optimistic economic outlook. The report emphasized the potential impact of domestic consumption and government infrastructure investments on future economic performance. Agricultural sector data showed a stable growth of 3.8% in December 2024, providing a consistent economic foundation. The technology and digital services segments continue to be significant contributors to the overall economic growth, maintaining their momentum from previous months. These comprehensive insights reflect India's dynamic economic landscape, balancing challenges with strategic sectoral performances and potential growth opportunities. This year has been characterized by a slowdown in consumption, tepid festival demand, and subdued marriage season. We had done an all-India 40-city rural clusters demand survey of multiple consumption articles in October and correctly called out the demand slowdown and likelihood of a slowdown in GDP growth. We would be happy to do such surveys specific to your industry. Exports imports. On January 15, 2025, the Commerce Ministry released India's trade data for December 2024, revealing a nuanced economic landscape. Merchandise exports contracted by 1% to $38.1 billion, while imports rose 4.9% to $59.95 billion, resulting in a trade deficit of $21.94 billion. Sectoral performance showed significant variations. Electronics exports surged impressively by 35.11% to $3.58 billion, marking a 24-month high. Engineering goods increased by 8.35%, ready-made garments grew 12.89%. Services exports demonstrated resilience, growing 3.25% year-on-year to $32.66 billion, with imports expanding 12%. The cumulative exports for April-December 2024 reached $321.71 billion, representing a 1.6% growth compared to the previous fiscal period. The core exports, non-petroleum and non-gems and jewelry, grew 8% to USD 30.9 billion, indicating underlying economic strength despite global economic uncertainties. India's import performance for December 2024. Imports rose 4.9% year on year to USD 59.95 billion, down from November's revised figure of USD 69.95 billion. The import landscape showed diverse sectoral movements, with electronics imports increasing by 9.6%, petroleum products rising 2.2%, and machinery imports growing 11.75%. Organic and inorganic chemicals demonstrated growth of 7.59%, while vegetable oil imports surged significantly by 18.61%. Gold imports remained a critical component, rising 55% year on year to USD 4.7 billion, reflecting continued investor and industrial demand. The trade deficit narrowed to USD 21.94 billion in December, compared to USD 31.86 billion in November. For the April-December 2024 period, total imports reached USD 532.48 billion, representing a 5.15% increase compared to the same period in the previous fiscal year. The cumulative import data reflects ongoing economic dynamics, with varied sectoral performances indicating resilience in India's import landscape. Commerce Secretary Sunil Barthwal noted that the import data demonstrates India's sustained economic momentum, particularly in technology and manufacturing intensive sectors. The ministry remains optimistic about maintaining import growth while managing the trade balance effectively. The rise of electronics exports is aided by the growing exports of smartphones from companies like Apple and Samsung, and the rapidly growing electronics ODM sector led by companies like Dixon. IIP. On January 15, 2025, the Ministry of Statistics and Program Implementation released the Index of Industrial Production (IIP) data for November 2024, revealing a robust industrial growth of 5.2% year on year. This marked the highest reading since May 2024, with accelerated output across multiple sectors. The detailed sectoral breakdown showed manufacturing output grew 5.8%, mining production increased by 1.9%, and electricity generation rose by 4.4%. On a monthly basis, industrial production experienced a slight decline of 1.2%, reversing the 2.4% gain observed in October 2024. Considering the April-November 2024 period, the cumulative industrial output increased by 4.1%, indicating a steady economic performance. The manufacturing sector was particularly strong, with significant contributions from basic metals, electrical equipment, and petroleum products. For December 2024 and January 2025, preliminary forecasts suggest a moderation in growth, with expectations ranging between 3 to 3.5%. Trading Economics Global Macro Models project the IIP to be around 3% by the end of the quarter, with a long-term trend of 4.3% anticipated in 2026. Foreign exchange rates. On January 19, 2025, the Reserve Bank of India released its monthly foreign exchange rate report, revealing significant currency market dynamics. The USD INR exchange rate stabilized around 86.67, showing a marginal depreciation of 0.3% compared to the previous month. The European Central Bank's data indicates the Indian rupee's performance against major currencies, with reference rates showing fluctuations. In December 2024, the INR traded between 89.1 and 91.65 against the euro, reflecting moderate volatility in the foreign exchange market. Foreign Exchange Dealers Association of India data from December 31, 2024 reported USD exchange rates ranging from 85.62 to 87.79, suggesting a gradual depreciation trend. The British Pound GBP exchange rates hovered around 107.48 to 107.96, indicating relatively stable currency movements. For January 2025, preliminary projections suggest the USD INR rate might stabilize between 86.50 and 87.25, influenced by global economic indicators and domestic monetary policies. The International Monetary Fund's exchange rate data supports this projection, with the special drawing rights interest rate at 3.236%, providing additional context to global currency dynamics. The RBI continues to monitor exchange rate fluctuations, maintaining a balanced approach to manage currency volatility and support economic stability. Traders and investors are advised to watch for potential shifts in global economic conditions that might impact foreign exchange rates. Most currencies around the world have depreciated. There is a growing thinking in India that India will have to let the rupee depreciate to remain competitive against these countries in the export markets. CPI, the Ministry of Statistics and Program Implementation, released the Consumer Price Index report for December 2024 on January 13, 2025, revealing a year-on-year inflation rate of 5.22%. The report highlighted rural inflation at 5.76% and the urban inflation at 4.58%, indicating a slight moderation in price pressures. The Consumer Food Price Index showed a higher inflation rate of 8.39%, with rural food inflation reaching 8.65% and urban food inflation at 7.9%. Trading economics global macro models project the CPI to be around 194.16 points by the end of the quarter, suggesting a potential stabilization of inflation rates. Monthly data indicates a decline in both general and food price indices, with the CPI decreasing by 0.56% and CFPI dropping by 1.48% from November 2024. The RBI's target of maintaining inflation within 2 percentage points of 4% appears to be on track, with the current rate showing a gradual cooling trend. For January 2025, preliminary forecasts suggest an expected inflation rate between 4.5% and 5% based on trading economics and analysts' expectations. Key sectors like housing, transportation, and fuel continues to play a crucial role in shaping the overall inflation landscape. Maha Kumbh 2025 Economic Impact. The Maha Kumbh 2025 is projected to generate an unprecedented economic boost, with estimates suggesting a total economic impact ranging between Rs 2 to 4.5 lakh crore. The 45-day event, running from January 13 to February 26, is expected to attract 40 to 45 crore devotees, creating massive economic opportunities across multiple sectors. The Confederation of All India Traders estimates the event will generate trade worth approximately Rs 2 lakh crore, spanning sectors like tourism, hospitality, transportation, and local commerce. The total expected revenue is projected at Rs 25,000 crore, with a potential GDP boost of over 1% in nominal and real terms. Uttar Pradesh government has strategically invested Rs 6,382 crore in infrastructure development, creating an estimated 1.2 million temporary and gig jobs across tourism, hospitality, transportation, medical services, IT, and retail sectors. The average expenditure per devotee is estimated between Rs 5,000 to 10,000, driving significant economic activity in Prayagraj and surrounding regions. The Maha Kumbh 2025 exemplifies India's unique economic model, demonstrating how cultural and religious events can serve as powerful economic drivers, generating substantial economic value and employment opportunities. I hope you have enjoyed this short update and found it useful. Please do let us know what else would you like us to cover in this update. Stay informed, stay ahead, subscribe to India Business Insights.